Hello and welcome. Today, we're diving deep into a topic that can make or break your financial future: how your credit score affects your loan options. Whether you're looking to buy a home, finance a car, or just get a better interest rate, understanding your credit score is key. Let's break it all down in a practical, simple way. We'll start with the basics and then explore how this score influences every major loan type in the United States, including VA, USDA, FHA, and conventional loans. What is a credit score? Your credit score is a three-digit number, usually between 300 and 850, those lenders use to decide whether to lend you money, how much, and at what interest rate. Think of it as your financial trustworthiness score. The higher it is, the more confidence banks and lenders have in your ability to repay your debts. It's calculated based on payment history, 35%, amounts owed, 30%, length of credit history, 15%, credit mix, 10%, new credit inquiries, 10%. So, if you always pay your bills on time, keep balances low, and don't open too many new accounts at once, you're on the right track. Why credit score matters for loans? Your credit score determines whether you're approved or denied for a loan, how much you can borrow, what interest rate you'll pay, if you'll need a co-signer or pay higher fees. A high score equals lower risk for lenders equals better loan offers for you. A low score equals higher risk equals more expensive borrowing, or worse, rejection. Credit score brackets. Let's quickly go over the general credit score ranges. 800 to 850 score is excellent. You'll get the best rates and terms available. 740 to 799 score is very good. Still very competitive offers. 670 to 739 is good. You'll qualify for most loans, maybe not the lowest rates. 580 to 669 is fair. You may qualify, but with higher interest or stricter terms. 300 to 579 is poor. Tough to get approved without special programs or high fees. Now let's apply these brackets to each major loan type in the U.S. Conventional loans. Conventional loans are not backed by the government. These are standard loans offered by banks, credit unions, and private lenders. Minimum credit score. Usually 620. Best rates. Start at 740 plus. With a high score, you could lock in a low interest rate, waive private mortgage insurance, PMI, or put down less money. But if you're under 620, getting approved is harder, and even if you qualify, your interest rates may be much higher. You'll likely have to pay PMI until you build up 20% equity. FHA loans, Federal Housing Administration, FHA loans are designed for first-time or lower-income buyers. They're more lenient about credit. Minimum credit score. 580 with 3.5% down. 500 to 579 requires at least 10% down, but note, having a 580 doesn't guarantee approval. Lenders may still want to see strong income, low debt, or extra documentation. A higher score helps reduce your upfront mortgage insurance and monthly payments. VA loans, Department of Veterans Affairs, VA loans are available to qualifying military service members, veterans, and certain surviving spouses. They offer incredible benefits like no down payment and no mortgage insurance. Minimum credit score. There's no official minimum, but most lenders look for at least 620. Stronger scores equals smoother approvals and better interest rates. Even if your score is low, the VA loan process can be forgiving, especially if your military service record is strong. USDA loans, U.S. Department of Agriculture. USDA loans are meant for rural and semi-rural properties. These loans also offer zero down payment if you qualify based on income and location. Minimum credit score. 640 is the sweet spot for streamlined approvals. Lower scores may still qualify through manual underwriting, but the process takes longer and requires more documentation. Auto loans, personal loans, and credit cards outside of home loans. Your credit score also plays a huge role in auto loans. Under 660? You'll face higher rates and fewer lenders. Over 700? You may get 0% APR offers. Personal loans. These often require at least a 640, with lower scores resulting in higher interest, sometimes even over 30% APR. Credit cards. With excellent credit, you get high limits, low interest, and premium rewards. With poor credit, you'll get low limits and high fees, or just secured cards. How to improve your credit score. If your score needs work, don't worry, it's fixable. Here are 5 strategies. 1. Pay on time. Every single time. 2. Lower your credit card balances. Aim for under 30% of your credit limit. 3. Avoid opening too many new accounts. 4. Don't close old accounts. Credit age matters. 5. Check your credit report for errors on sites like annualcreditreport.com. So, how does your credit score affect your loan options? It affects everything. From whether you get approved at all, to how much you'll pay every month, to how fast you can build wealth through real estate, vehicles, or personal investments. Good credit gives you leverage, plain and simple. Whether you're aiming for a conventional loan, a VA benefit, or a rural USDA opportunity, maintaining a healthy credit score opens doors and saves you thousands over the life of your loan. And remember, it's not just about qualifying. It's about qualifying on your own terms. If this helped you understand your options, give it a like, drop a comment with your credit questions, and subscribe for more insights on building a stronger financial future, one smart choice at a time.